Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from ChartsandMarkets.com runs down the major markets. It seems a number of challenges hit gold, crude, and Bitcoin. Orange juice futures were down 40%, but has your glass of OJ dropped in price? Author of several books on the economy, including The Money Bubble, John Rubino, chats with us to give us his assessment of the early days of the Trump administration. He comments on the shipping of London gold to New York, the AI boom, gold, and the possibility of buying a $5 million gold card to become a U.S. citizen. Veteran trader Victor Adair checks in from Vancouver Island to chat about what's behind the decline in the stock markets, gold, currencies, and Bitcoin. He also tells us what company is the most important in the world and whether Bitcoin is really digital gold. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from ChartsandMarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at ChartsBy. Ross, welcome back to This Week in Money.
Well, it was a 2-week break, and it's a pleasure to be back, Jim.
Ross, how would you describe what happened on the stock markets this week?
Well, it's more of the consolidation. You know, here we are. Everybody got used to the bull market from the fall of 2022 up until the fourth quarter of last year, and, you know, became complacent that it's always an uptrend. Well, in reality, when you look back historically, these long periods of trending markets are inevitably followed by consolidations. And this one, you know, we've been stuck in this trading range since the early part of November. And with that, there's clearly been some rotation. The mega stocks have, peaked out early and have had some pretty solid corrections. Some of the biggest names, including the Microsofts, really have taken it on the nose here in the first couple of months of this year, and that's it's not surprising. So we've been watching this 20-week simple moving average on the S&P as a key support. That was tested at the early part of last month, and we've tested it again here in the last couple of trading days. Good bounce on Friday, right into the closing bell, but that is still, I think, a pretty important level. And all of this looks like a rolling top, not such that will create a massive bear market, but just a rolling top with a consolidation. And the key support is down around 5,600 on the S&P. So that's roughly sort of 8 to 10% off the highs, which would be standard in any bull market. So, that's the outlook right now. On the upside, the resistance levels that we saw 2 weeks ago should remain pretty much in place. And I think as we move into through the first quarter into the second quarter, you probably see that the deeper correction in the equity markets.
What's going on with gold?
Gold, before I went away, we had some upside exhaustion alerts, and we had a few weekly sequential signals when we were up around $2,950. The stocks showed a divergence against the highs at that point, and we were into what is normally the end of the seasonal run. So here we are. Gold has taken it on the nose in the last week or so, and we're down to 28.25 right now as far as the spot price is concerned. The best support is closer to 27.50. As long as we hold the significant uptrend here, then I think we're still looking at numbers significantly higher in the second half of this year. The Fibonacci target that we're working with, coming off the long consolidation from 2011 through 2023, gives us an uptrend target of 33.36. On the short term, the consolidation of the last couple of years from 2022 down through 2023, if we take the depth of that, twice that depth provided a target just shy of 3,000, which is what we managed to do on this most recent rally. So, first target here is in place. Look for this correction followed by ultimately the higher high. And, from where we are now, that's probably another, 33, 36 for a pretty good target. So lots of room still on the upside for the gold market.
Bitcoin is like somebody jumped out of an airplane without a parachute.
Yes, and that one, we've got some good signals here up in November, the market, when we just hit about 108,000. Good overbought signals at that point. Came back and retested the high during January. So you've got a double top, and we broke the rising support lines here a week ago. And if we take a look at the rally from September, and that's the last significant low that we saw, which was down just around 50,000. Take a look at that rally. The normal extent of correction in Bitcoin is a 61.8% and then a 78.6%, both of the Fibonacci retracement levels. This week, we got down to 78,000. 75,000 and change would have been the 618 retracement level. And as of Thursday and Friday, there's some capitulation signals in here, and we haven't seen capitulation in Bitcoin for a couple of years. That was back at the lows when we were well below here. So at this point, I think you probably are set for a pretty decent bounce, maybe up close to 90,000. But overall, I think the trend here is to the downside towards the lower target range, which is going to be around 65,000.
What's going on in the crude oil market?
Oil market has not done well. We've got seasonally should have had a decent rally in here. It clearly lost steam when it got up to 80, and we had some commitment of traders numbers that were at extremes at that point. And the break from 80 now down to 70 has become oversold. But looking at this week's COT numbers, we're still not seeing any buy signals. I would suspect that we're probably set up for a trading range in here, probably bounded by the $72 high and maybe 68 on the bottom end for now.
Is there anything else we should be taking a close look at, say, orange juice?
Well, OJ, I don't know if it was all about Canada deciding that they were going to cut back on their consumption, but clearly the orange juice market has really, the squeeze has been off. We were at $5.50 on the price at the early part of the year. Consolidated a little around $4.75, but in this last 4 weeks, my gosh, we've gone from $4.75 down to $2.75. So oversold on OJ. It's been a massive break, and there's probably a pretty good trade here for anybody who likes to trade it. It's a very thin market in terms of liquidity, but there's probably a decent opportunity to make a few dollars on a decent bounce.
Ross, thank you so much for chatting with us.
Good to be back with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, John Rubino. Next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is John Rubino, author of several books on the economy, including The Money Bubble. He founded the website dollarcollapse.com. You can find him on Substack at Rubino.Substack.com. Welcome back to This Week in Money.
Hey, Jim. Good to talk to you again.
What's your assessment of President Trump's first month?
Very exciting and very sloppy. You know, he really hit the ground running. Executive orders all over the place, got Doge shutting down parts of the government and tearing up the computer systems and everything, and just generally firing people across the board. You know, a lot of this is in theory really positive. We absolutely should be shrinking the government. It should get a lot more efficient, and we should find out what crimes our government has been committing, you know, because, you know, there's tons. My worry is that it's being done in such a chaotic way that it's going to turn public opinion against the process and then short-circuit it before we really get to the good stuff. Because, today they're supposed to be releasing the Epstein files. So it could be that the second half of this day, after you and I get done talking, is going to be very different from the first half, depending on what's in the Epstein files. But, I'm hoping that they're able to accomplish the good things they're trying to accomplish without tearing so much up that we end up not accomplishing a lot of that stuff. Now that's domestic. On the foreign affairs side of what Trump's doing, I like it. You know, they're telling Europe that Europe needs to cover its own defense budget, which is decades overdue. They're closing down the Russia Ukraine thing, and so we're moving away from World War III instead of towards it. So I'm happy about all of that, but again, you know, it's a big world out there, and we antagonizing our allies is a dangerous strategy. So it's not without risk what Trump is doing. I like it, but there are some very big risks involved. So anyhow, so far so good. Let's give it a B- and hope the next month is an A+.
President Trump is going to implement a gold card that will cost $5 million. He says it's better than a green card. Could President Trump's gold card be bait to get Canadians to agree to become the 51st state?
I don't know how many Canadians would pay $5 million to have access to the United States. You know, it seems like you guys already can come down here anytime you want to, and then go back home when you're done, you know, which is probably a much better way to work it. The numbers that Trump has thrown around are very enticing. You know, if 1 million people pay $5 million, that's $5 trillion, that kind of thing. So we're going to balance our budget by inviting all the rich people to come live here. So I went over to what's his name? Andrew Henderson at Nomad Capitalist, which is a firm that advises people on how to get second passports and how to move to other countries and take advantage of the investment for citizenship programs that are out there. And he says the U.S. idea, as Trump has sketched it out, is wildly overpriced, and you can get better deals around the world. So the people he's advising will know not to take Trump up on this gold card thing. So we will see. You know, I really don't know. $5 million doesn't sound like a lot in the scheme of things for the world's rich people. But we'll have to see what the benefits are and see if they're worth the money to the world's billionaires and multimillionaires. But it shows Trump is thinking of new product lines, which is always a good thing.
Massive amounts of gold are moving from London to New York. Is this because of the Trump tariffs or the Dodge audit of Fort Knox or Doge?
Well, yeah, it started out as everybody thinking it was about the Trump tariffs. In other words, if transactions between the UK and the United States or Europe and the United States are 25% more expensive because there's a tariff slapped on everything, then if you got gold in London, you can't get it home without paying the tariff. So lots of people, so it was sad, lots of people were moving their gold out of London and into New York just to evade this, conceivable tariff. Then the story switched to, they're going to audit Fort Knox, and there's no gold there. So the U.S. government has to move all the gold that is shipped out of Fort Knox back into Fort Knox before Elon Musk and Trump show up. And that's why there's so much gold moving from Europe to the U.S. So we'll see. I have no idea what the real story is, but there is lots of gold changing hands. And it's affecting pricing on the various exchanges, and there's also a lot of gold being pulled out of the COMEX in the U.S. And it's not clear where that gold is going. So this, in other words, this is a story where we don't know all the bits and pieces yet. But it's been very, very good for gold so far because, more than anything else, it's putting gold in the news. Because gold's been in a hell of a bull market for the last couple of years, but it's been very quiet. Nobody's been paying attention because it's been dwarfed by Nvidia and Bitcoin and stuff like that. So people aren't as excited about a 50% increase in the price of gold in the last 14 months or whatever we've seen. And they should be more excited. And now that gold is in the news, even though we don't understand exactly why it's in the news, that's good because that means people are paying attention. Once you hear about gold, that if you look into it at all, you see that it's in a rip-roaring bear market, and you wonder why. What does everybody know that you don't know? And then you call your financial advisor and say, "Get me some gold or some gold mining stocks or something." So it's a good thing that all of this stuff is happening in gold, but we really don't know all the details of it. So we just got to wait and see how it plays out.
Would you rather prefer to have gold certificates or actually gold bars under the floorboards?
Gold certificates are that still has counterparty risk, right? If the government promises to give you gold for this piece of paper, that's better than no promise. But it's still a promise from an inherently untrustworthy entity. So, we're talking about doing some stuff like that where we have some gold-backed bonds or something. And that would be my complaint about something like that because, it's a 50-year government gold-backed bond. And that means in 50 years, the same government has to be here or another trustworthy government has to be there. And I'd say the odds of that being the case in 50 years is well below 50-50, just given what's happening in the world.
How important is China's decision to let insurance companies own gold?
That actually is potentially important because insurance companies have a ton of money. So right now, presumably China's insurance companies are limited to very high-quality investments like government bonds. And if they're allowed to buy gold, in other words, if gold is put in the same category as a government bond, as their version of a Tier 1 asset, then that makes gold more attractive, other things being equal for everybody. And if it allows the insurance companies to buy gold with a fair bit of their cash, that's potentially a lot of demand because insurance companies, by their nature, build up huge investment accounts in order to pay off the policies that they're issuing. So if they take just a fraction of what they don't have in gold now, put it into gold, that is enough to move the market. So it's a potentially big deal.
South Korean banks have stopped selling gold and silver bars. Does this have broader significance?
Yes, it absolutely does. When banks run out of something, or when anybody runs out of something, that's a sign that there's a shortage and that the thing is more valuable than people thought it was. So when banks can no longer sell gold and silver, it means there's a growing shortage of gold and silver. It might be localized. But, a bunch of localized shortages can combine into a broad-based shortage. So, yes, this is a good thing for gold and silver, assuming you've got it. I mean, once the supply dries up and you don't have it yet, you can love gold, but you won't be able to get it. So this is a sign that we need to be fully invested in precious metals now. Just get that over with and then move on to other stuff.
Gold miners are putting up good earnings numbers. Will this get investors' attention?
Well, prior to today, gold and silver are getting whacked today, but the miners were starting to generate a little bit of buzz because they were coming out with some good numbers, like you said. Agnico Eagle and Newmont and Barrick all put up pretty strong cash flow numbers, and they're all talking about buying back their own stock and raising their dividends. In other words, stuff that investors love to see. So positive cash flow, which flows from higher metals prices, at least so far, are being used by the miners in a way that gets investors' attention. So, you're seeing higher earnings, higher cash flow, rising share prices, all of which attract momentum investor money. And then you're seeing higher dividends and share buybacks that attract value investor money. So it's a good thing across the board for the miners. And, if gold stays where it is, if it just holds this price, first quarter earnings are going to be even better than the fourth quarter earnings were. And that's going to add to the momentum for these guys. So, here's hoping that gold stays above 2,900.
How much further does the gold bull market have to run?
Well, short-term and long-term are maybe two different answers there because, in the short run, we've had a great year for gold. And so a correction is completely possible. And the economy is slowing down in the U.S. and it's completely possible that we have an equities bear market pretty soon, which leads to a recession. All of that stuff is out there waiting to happen. And that would be bad for gold. It could put gold into correction. Longer term, we're destroying the fiat currencies of the world at an accelerating rate, and that's phenomenally good for gold. So the longer term bull market is intact and looking better every day. The 6-month outlook is pretty dicey in my opinion. I wouldn't, it's very hard to call short-term moves, but right now I would be cautious if you're, if you don't already have a lot of gold and silver, you kind of, there are reasons to want to get topped up. On the other hand, there are reasons to be cautious. So I don't have a good answer for short term. I would be reasonably cautious right now.
When will silver start rising?
Well, silver's story is slightly different from gold's because silver is an industrial metal that is in deficit. So if the economies of the world keep growing, the demand for silver will keep rising and the shortage will become more and more acute, which will lead to higher prices. So just from that point of view, silver's a buy. Again, with the caveat that there might be a recession coming and that might interrupt the bull market in the short run, but definitely not in the long run. From the monetary metal standpoint, silver is relatively cheap compared to gold. The gold-silver ratio is still around 90, which is normally the point where you buy silver instead of gold, or even buy silver and short gold. That's a pretty aggressive thing to do in this world, but I think there will be money to be made. People who do it now will probably make money, but I'm not sure I have the stomach for that kind of a risky trade. Anything involving shorting gold is scary, but silver ought to outperform gold going forward.
DC real estate markets are tanking. Why is that?
Well, part of it is that the DC real estate market has boomed because government hiring has been basically the main driver of employment over the last few years in the U.S. The Biden administration was just terrible in every conceivable way. And one of the things it did that was really dangerous, and it's going to come back to bite us, is that it kept the economy growing by running massive deficits and hiring hundreds of thousands of new workers that were not needed. And now Trump is in there doing what should have been done a long time ago, and he's clearing out a lot of the deadwood. And a lot of those people are homeowners in the D.C. area. So, the number of houses for sale in D.C. is going up, and prices are going to have to fall, which is healthy. You shouldn't have a booming real estate market in the empire's capital city, because that means the empire is sucking wealth out of the rest of the empire, or out of everywhere else, and putting it in the capital city where the aristocracy lives. So you want a modest real estate market in the empire's capital city to show that wealth is being created everywhere in the empire, and not just in the capital because of political corruption. So this is pointing us in a good direction, but it might be brutal for the DC real estate market over the next couple of years.
Is Doge finding anything interesting?
Yes and no. They've announced a bunch of stuff that sounded like massive corruption and turned out to be much less juicy. But they're also finding some other stuff that is really juicy. There are thousands of quote unquote public servants who start with a couple of $1 million in the bank and end up a few years later with $50 million. How did they do that? So Doge is looking into that. And then we've got the Kennedy assassination files. We've got the Russia collusion files that they're digging into and finding who did what. We weaponized the criminal justice system in the U.S. to go after public or go after opponents of the regime. And we're digging that up too, and that's all good. And then the USAID thing, it turns out that USAID had the veneer of a charity, going around doing humanitarian things, but it was actually, that was a cover for black ops that did what the CIA used to do, but in a much more easy to get away with way. And so hopefully the actual truth comes out about who they were giving money to, and which aspects of the global media ecosystem they were perverting, and which countries they were helping to overthrow, because that's what they were doing. And to the extent that Doge ferrets that stuff out, that's a good thing too. So we'll see. I mean, again, they've got to do it in a way that's not so clumsy that it antagonizes everybody. And they are doing a lot to antagonize people who they need for this to work. So no guarantees, but so far so good with Doge.
Well, I'm just reading a tweet from Elon Musk appealing to retired aircraft traffic controllers to come back to work after he laid off air traffic controllers.
Yeah. See, there are people, the government does some legitimate stuff, and the fact that it got way overblown and it's doing things that were not just unnecessary but flat out evil doesn't mean that there aren't a lot of people within the government who are competent and who we need, and air traffic controllers are at the top of the list, So Elon Musk has to be careful that he doesn't antagonize the best people in government in the process of getting rid of the deadwood. And so far, he's not doing a very good job of that. He's kind of treating everybody who works in the government in the same way. And, air traffic controllers, a big part of the FBI, for instance, was not corrupted in the past few years. And these are, law enforcement experts who we want to keep. We don't want to just blow up the whole department. And so these guys have to do a much more precise job. Maybe they need a scalpel instead of a sledgehammer going forward. So we'll see. But one other personal example of that is I've got a friend whose daughter is back here visiting her dying mother, and the daughter works in Alaska for the Parks Department, and they just called her home, and they said, no, you can't have this kind of leave. You got to get back and work in the office, or you're fired. So now her mom is going to die without her at her side. And, nothing is gained by that, but a lot of antagonism is generated by it.
John, anything else we should be keeping a close eye on right now?
Well, I would say just be watching the stock market here. We're heading into what feels like bear market territory, in part because of a little bit of the chaos that's going on, and in part just because everything is so overvalued out there. I mean, the artificial intelligence boom has gotten so far ahead of itself that, with those being among the only stocks that are supporting the market, we could very easily be in 1999 territory right now, heading for 2000, when a lot of those big stocks back then joined the 90% club. In other words, they went down by 90%. So I'd be very careful, and maybe even look into shorting right now. Not with all of your money, but say 10% of your money thrown at NASDAQ shorts or something like that might be an interesting time. It might give you 6 months of really positive action.
John, where can our listeners follow you?
At Rubino.Substack.com, and I'm publishing a newsletter there that covers a lot of this stuff with an eye towards actionable advice of how to deal with all the things that are coming at us.
John, thank you so much for being on This Week in Money.
Thanks, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble. Coming up, Victor Adair, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Victor Adair, recently retired from nearly 50 years of being in the brokerage business in BC. His website, VictorAdair.ca. He's speaking to us from beautiful Parksville on Vancouver Island. Welcome back to This Week in Money.
Thanks, Tim. Always a pleasure to talk with you.
Stocks fell hard this week. Interest rates fell. Gold fell. The Canadian dollar, other currencies fell. Bitcoin tumbled. It seems as if everything was down. Before we discuss individual markets, what's the macro picture behind all of these downward moves?
Well, I could give you one word. Trump. Mm-hmm. Trump has been an incredible disruptor in all of the markets that I follow. That's the financial markets. I trade the futures markets, but I'm trading currencies, interest rates, stock indices, energy, metals, that sort of thing. But yeah, Trump has had an amazing impact on the market here since before the election, but certainly once the election was, clearly his. He had that clear victory. The stock market just took off to the upside. The crypto markets were flying. Gold prices were flying. The U.S. dollar had been rising, and it just accelerated to the upside. So Trump has had a very, very big impact. So if anybody was asleep and they missed that one, now you know. But, how did that fall out on different things? I wrote in my blog last week and maybe the week before about a term I've seen bandied about here for some time, and that's called American exceptionalism. And when I wrote about it last week, I looked at it from two ways. On the one side, from the currency side, and the other view would be the stock market. So on the currency side, the U.S. dollar has been on a hell of a run here for the past few years, and the U.S. dollar index that we most often use, which is heavily weighted with European currencies, is effectively at a 23-year high. But the more important index, and probably less followed, is what we call a trade-weighted index. Why I say that's more important is because that includes a lot more of the Asian currencies, or is weighted with more of the Asian currencies. Now, the trade-weighted U.S. dollar index up till here early this month was just at all-time highs. It had just been going up, up, and up. And part of the reason for that, of course, was that the Asian currencies were so weak, and I think they were weak by design. It's called a mercantilist policy that allowed those countries to export their stuff more. Their currency is cheaper. It's easier for other people to buy their stuff. So there was this American exceptionalism on the currency side. And on the stock side, we've seen the American market just so outperform the rest of the world, it's like the rest of the world didn't matter, okay? I've used the expression on your show so many times that capital comes to America for safety and opportunity. Certainly when the world is worried about things, the United States is a relative safe harbor, there's that. But the opportunity side, where, we've talked about the Mag 7, the big cap tech stocks, but just the capital markets in America are so big, so dynamic, and have so many opportunities. It just acts like a magnet and draws capital to America. Okay, so we have this American exceptionalism thing, and certainly in the stock market, the American markets have outperformed, let's say, the European markets just by a country mile since the great financial crisis, for sure. And it seemed to me, and this was my point last week in my notes, that we're maybe making a turn here. That like the cherry on top of this huge move of American exceptionalism was the election of Donald Trump, and he clearly won the election, popular vote and everything else as well. But this was now going to usher in a new golden era of lower taxes and dynamism in the American economy, and so on and so on and so on. Okay, so that kind of set the stage for the stock markets racing away to the upside once he was elected. I think the poster child for the stock market going up post the election would have been Tesla. The share price virtually doubled from the time of the election, November the 5th, until late December. Now, folks that follow that will know that it's actually given up almost all of those gains since then. Certainly part of it might be that there'd be a lot of people around the world because maybe they don't like Trump or they don't like Musk or whatever, said, I'm not buying a Tesla, that's for sure. And the share prices come back down. So I think we get to a point where things are so good they can't get any better. And when you get into a spot like that, then, you picture a pendulum swinging back and forth. You get so far one way, it's sort of bound to go back the other way. The fancier term for that is mean reversion. When you get too far one way, the market kind of comes back the other way. So I think that right now is kind of the background that's sort of been brewing here. Certainly, I'd say certainly for the last month or maybe more, where you're starting to see signs of maybe excesses to the upside. The S&P hit all-time highs last week. Bitcoin started to fall off a little earlier. And by the way, I think of the S&P as my favorite risk barometer. When the animal spirits are feeling frisky, okay, they're going to be buying the S&P. That's just this massive capital pool, and when they're driving that market to the upside, that's telling you that people are willing, hell, they're chasing stuff, and they're willing to add more leverage and just really ramp it up. So I think we kind of reached a moment like that, certainly in the S&P the last couple of weeks, and we've come off. The U.S. dollar's backed off a bit. Bitcoin come down 25% or so from its highs. So I think we've had, let's call it so far, at least a correction, once we had got to the point where things just couldn't get any better.
The S&P hit all-time highs last week, but then tumbled 5% this week. NVIDIA had a strong quarterly report, but its shares are down. What's happening in the stock market?
Well, good that you mentioned NVIDIA. I mean, this, here's a term you hear. It is the most important company in the world. Whether or not that's true, whatever. But I think it kind of shows, let's call it how some folks think about it. And it is an amazing company. I mean, I looked at their quarterly report data. It came out after the close on Wednesday, and like they beat on everything. You know, they made more money, they did more of this, more of that, and their forecasts for, you know, how things were going to be going ahead was like, it's just going to get bigger and better, and you just can't believe it. Well, their stock opened about $2 higher on Thursday morning and then fell $15. And I thought, well, what is that all about? And it could be a case of, you know, when the bar is so high and they clear the bar again, maybe it just can't get any better. Or maybe there were folks out there that owned NVIDIA stock and thought, you know, if I can see this market get a bit of a bump to the upside, I'm going to sell it and I'm going to put my money in T-bills and live happily ever after, or whatever. But certainly it was not a bullish signal for the market to see the world's most important company come out with fabulous results and their stock go down. So I kind of think broadly what's been happening in the market, in the stock market, is there's been too much risk taken on. We've seen, well, it's almost a derogatory term, but we call it retail. Retail was bidding the market up in January like never before. You know, I guess people were telling each other, geez, I'm making all kinds of money in the stock market, you know, you should get in and all of that. But we can see the actual flow of capital. Retail was just coming after the stock market like there's no tomorrow. And, you know, we got to a point where we needed a correction. Now, this past week, market did come down. S&P, as you say, was down about 5% from the all-time highs it hit last week. But interestingly enough, we're going into the end of the month, the end of the week, and I've always thought that the most important price of anything during the week is where it closes out on Friday, because that's what people are willing to live with, as it were, over the weekend. And that gets, I think, even more important at a month end. And going into the close on Friday, the stock market came zooming back. Now, it's still well down on the month, and it had made, I don't know, I guess the NASDAQ was at 3.5-month lows, well below where it was when Trump was elected, before we got that turnaround at the end of the week on Friday. The market just seemed to get bid aggressively into the close, and you think, okay, maybe there's been a thing in the market for a long time called buy the dip. And when you look at the stock market, you know, it has, I mean, you could go back to 1928 or something, but certainly since October of 22, the market has gone up, and any time it had a dip, like we had last August when the S&P fell almost 10% on what we call the yen carry trade worry. If you stepped in and bought the market there, you were doing well. So I think there's still some buy the dip, and it's a good opportunity thinking in the market, and that may have been what showed up in the stock market on Friday.
The gold market's been flying higher this year. Actually, it's been flying higher ever since late 2023 and made record highs this week. What are your thoughts on that precious metal?
Okay, with gold, I think, and anybody that's trading the market and knows something about gold understands that the biggest buyers in the market have been the central banks. The rationale, it seems, for that is the central banks saw what happened to Russia as they were sanctioned and penalized for invading Ukraine, and thought, I don't want to own a whole bunch of treasury bonds and then get on the outs with the Americans and they sanction my accounts. So people, and by say people, okay, it's China, it's Saudi, it's Russia, were deciding to switch some of their reserves, whether at the central bank or in sovereign wealth funds or whatever, into gold. As I like to say, gold is an asset that is nobody else's liability. So that I think has been the bedrock support for the gold that has had this great run. Now, speculators, I use the term, have piggybacked on that knowledge that the central banks were there. And we've seen since particularly, actually it was October, the weekend of the Hamas attacks on the Israelis, was sort of the low for gold, and we've had this amazing run since then. Okay, that's kind of like the background. The last couple of weeks, I have been of the view, absolutely different metrics that I look at the gold market was in need of a correction. Again, it had people chasing it higher, just like they were chasing higher in the stock market, and we've had it back off, I guess, about $150 from its highs. I think on the year to date, actually from December lows to this week's highs, we're up about 13%. On a chart pattern, we had a weekly key reversal down on gold. Now, I don't think it's going to fall to zero. That's not what I mean. I just think it got ahead of itself here. A lot of the fundamental factors that have been supporting the market are still in place. I have noted in my trading desk notes that the gold shares have not kept up with the rally in the bullion. My short and sweet answer to that would be that the main buyers have been these central banks, and they want bullion. They want physical delivery of metal. They don't want gold shares. They don't want silver. They don't want ETFs. They want the bullion. So that has caused the price of gold to trade at a premium, say, to gold shares and to silver. Jimmy, actually, while thinking of that, we should also discuss the bond market. We had, last year, the lead story, or the narrative, whatever you want to call it, on the bonds was that the major government deficits that occurred under Biden were probably going to be continued no matter who became the next president, Trump or Kamala Harris. And the bond market fell. Interest rates were rising as the bond market demanded what they called a risk premium for buying long-dated paper and being at the mercy, I suppose, of the market beating you up as the Treasury just issued more and more and more bonds and inflation and so on. So that has kind of changed, and that's changed sort of in step with this change in what I call American exceptionalism, or at least the concept of that. So we've seen bond prices rally, and actually here I think the 10-year note has rallied for 7 consecutive weeks. I think it's up for about 10 of the last 12 days or something like that. Particularly lately, it's been accelerating higher. That means bond yields falling as the prices go up. And I think the market has just done a 180 from believing that the deficits were going to get bigger and bigger and bigger, and Treasury paper was going to be like a tsunami, hitting the market, to, hey, maybe whether they mean to or not, the new administration here is going to get the deficit down. And then very lately here, we've had a rather dramatic swing in the expectations of where the economy is going. One of the things I look at is what's called the Atlanta GDP Now forecast. Now, it's a bit wild. It'll swing a lot. But 2 weeks ago, they were forecasting GDP for the first quarter of this year to be around 2%. This week, they came out with negative 1.5%. I mean, that's a massive swing, but I think that goes to some of this reluctance we've seen on the part of the consumers. I mean, I think a lot of people really are concerned about the uncertainty around tariffs and that sort of thing, and it showed up in the market. So the bond market's been bid aggressively, interest rates going down, thinking maybe the economy is going to slow down. I think we've also seen a swing here to the expectations that the Fed will probably cut rates more than what the market thought they'd be cutting, a couple of weeks ago. And, that's the bond market's very important, and it's had this big swing. So yes, as we said at the top of the show, stock market's been going down, but so have interest rates.
Some people refer to Bitcoin as digital gold. Do you agree? And what's happened to Bitcoin this week?
Yeah, I hear that digital gold thing. Jimmy, I've never traded Bitcoin. I probably never will. Not like I have a grudge against it or anything. I mean, I don't trade oats either. I don't trade aluminum in Turkey. There's a lot of things I don't trade. I don't trade Bitcoin because I got to say, I don't know what it is. And of course, early on, you'd have these stories come out that somebody had a bunch of Bitcoin, whether it was $400 or $400 million worth of Bitcoin somewhere, and it just disappeared. You can't trade stuff like that. You just don't want to have anything to do with it. There are people out there that are real proponents of it. I understand that. But what I see Bitcoin as is just it's like the S&P on steroids in terms of being a risk barometer. When the folks that want to buy Bitcoin get wound up and get driving it, I mean, it's just going to the moon in a hurry. And then conversely, when the bottom falls out of it, or at least when it goes into decline like we've had here the past couple of weeks, man, I mean, it's down 25% from where it was, I'm going to say a couple of weeks ago. Maybe it's a little longer than that. But to me, no, it's not gold at all. And I understand that some of the folks that trade it all the time believe that it's even better than gold. I just don't trade it, and I mostly, in fact, the only thing I use it for is kind of as a barometer for what the particularly retail public is doing in terms of risk.
The U.S. dollar index rallied about 10% from September to January, but has backed off about 4% in the past few weeks. What do you see ahead for the greenback, and will the poor, beleaguered Canadian loonie ever recover?
Okay, I'll try to remember. Two questions there. The U.S. dollar, I know, most of the time in the last couple of years that you and I have been talking, I've been pretty much a U.S. dollar bull. And I think I've said the last couple of months or so that I'm changing a little bit. I mean, it's had a hell of a run. One of the reasons I became a little tentative about it was, as mentioned earlier, the Asian currencies are grossly undervalued. And that's part of a mercantilist policy to keep their currencies low so they can export their stuff, particularly into the American market. And that's not lost on anybody. I mean, people have been seeing that for a long time. That is one of the reasons that the United States has such a massive trade deficit with Asia. And I just kind of thought there was at least a risk that Trump and his team would somehow try to force the Asian countries to upvalue their currencies. So I thought that was a big risk to the U.S. dollar. If you're a currency trader, if you're of a view that the Asian markets have been cheating, as it were, by keeping their currencies too cheap, that's going to look like a win. But anyway, that was a vulnerability to the U.S. dollar, and I think that's still out there. The problem for Trump, I suppose, is how do you get the dollar down and still maintain it as the most important currency in the world, or the reserve currency. I'm not sure how that really goes. The loonie, the loonie got hammered on February the 3rd when Trump announced the 25% tariffs, and then a couple hours later reversed them, and so the loonie went through the biggest one-day's trading range that we've seen in a few years. I think we dropped down and then came roaring back. This past week or so, the loonie has been weak, but so have other currencies around the world, as the U.S. dollar, which had backed off on the U.S. dollar index, had backed off about 4% from the highs it made in January to this week's lows. I'm not sure that the Canadian dollar right now is pricing or fully pricing in that we may get hit with the 25% tariffs next week. Trump came out yesterday or so, late this week, I should say, and reminded the markets, those tariffs are going to go into place. He's cranky with the Canadians and with the Mexicans, so he's going to whack them. Will the loonie ever recover? Well, never say never, as they say, but there's so many things in play here. Let's just say, for a starter, that Canada remains intact, and then it's the currency of our country in a situation like that. The fallback is that Canada is just this amazing basket of all kinds of commodities, particularly energy, all kinds of energy, whether it's hydro or uranium or anything in between, and that the world is going to want what we have. Trump is maybe pointing out that the world will want just come and take what they have, especially in the Arctic, because we're unable to defend ourselves up there. I don't know. There's just so many things at play in terms of sovereignty and that sort of thing that I can't know. I'm certainly no expert on that. Will it ever recover? I don't know. And really, for the trading that I do, I don't care. That's not part of my time horizon. I'm a shorter term person than that when it comes to my trading.
You've been writing your weekly trading desk notes for over 8 years. You usually present an overview of the financial markets and detail the trades you've been making. You frequently have a thoughts on trading section. What's that about, and why do you do it?
I think I've said on your show before that I make money trading not because I've got a great crystal ball, but because I'm pretty good at managing risk. And I think a lot of folks that are maybe new to trading or, that's not their career, are looking for, what's your best pick? Where's crude oil going to go? Where's, NVIDIA going to go? What do you see in the future for, the share price of Royal Bank? That, to me, is just such a small part of the equation of let's say, eventually making money with trading, that I'll have this section, I call it Thoughts on Trading, where I'll just talk about some of the things that I've done. And the way I think about trading, for sure, is that it's not a game of perfect. This past week on my blog, I wrote last weekend, I was short the stock market, and I was long the bond market, and I was also long of the Japanese yen. Some people might look at that and think, well, geez, I guess he must have made a fortune this week because all those things came true with the yen not quite doing all that well. But I managed to make money this week, but I certainly left money on the table just by not being perfect with my trading. I think that's very important, and I think I write my notes. Here's the whole thing in a nutshell, I guess. I write my notes because it makes me think about what do I think about markets and why do I think that. And, if I'm writing it down, I want to be accurate, so it makes me double check. I am a better trader for my own account for having written the notes and doing the work that goes into it. I mean, I make notes at my desk all week long, so I've got some material to work with when I sit down on Saturday to write my notes. And just like when I'm reading some research or some commentary from somebody else, I am not looking for them to tell me buy this, sell that, this and that. I'm looking when I read their stuff to get an idea. And it might be that I'm going to think, this guy really is missing a lot here. I'm going to do the opposite of what he's saying. And that's not a put down. It's just he's given me an idea that there's an opportunity to do something different. So I'm kind of hoping that the people that read my notes get an idea that can help them with what they do. So, yeah, and people that want to subscribe to my service, it's a free subscription. It's not like you have to pay me any money, but what they get is when I write some new notes, and it's usually about once a week, and I get them posted up on my website, I go to my MailChimp and send a note out to my nearest couple of thousand friends that are registered on my site to say, hey, here's a new piece I put out, and kind of here's some highlights about what it's all about. If you're interested, click here and go to my website, and you can read it, and I hope you get a good idea.
Victor, thank you so much for being on This Week in Money.
Jim, it's always a pleasure to talk with you, and thank you for having me on.
My guest has been Victor Adair. Check out his website, Adair.Ca. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, John Rubino, and Victor Adair. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.